Drew, will we get a rate cut today?
I think we will. Do we need one? No. But they're going to give it to us anyway because they want the markets to be nice and
You'll get
calm
more and like
into
it, to
the second year.
paraphrase Caddyshack.
Yeah, well, it's funny. I'll get more and like it, but the consumer's not liking it. If you look at consumer confidence, it actually kind of peaked when the Fed started cutting rates. Consumer savings rates are up since the Fed started cutting rates. That's not behavior that suggests that consumers
By the way,
really
borrowing
want these.
rates aren't going to go down. The bond yields have actually ticked higher the last couple of weeks.
Yeah, so if no one wants it, why are we getting it?
Well, answer your own question.
Wall Street wants it. So this is not a case where the consumer wants it necessarily. If you look around the world, things are getting, I wouldn't say better, but there's more clarity. So it seems like Europe was resolving its issues with the UK. The U.S. and China are moving closer and closer towards a trade deal. Mm-hmm. We don't know how those are going to look, but the range of outcomes is getting narrowed.
Is this the last rate cut of this cycle? I mean, in the next couple of years?
I would say it's the last rate cut of this cycle, and that'll be for at least a year.
Is the next Fed move a rate hike? Assume we get it cut today, we stay low for a couple quarters, couple months, couple years, whatever it is. Will the next cycle be up?
I mean, our view is the next cycle will be down.
Really?
But I'd say it's probably 50-50 that the Fed would actually hike rates before that happens.
So you just think we need to wait where we are now, and then ultimately they'll have, you want to save their ammo?
I think we were doing fine with continuing to move rates higher. And I think people were benefiting from it. Savers were finally beginning to benefit from it. Consumers were benefiting from it. You saw the savings rate coming down, right? Mm-hmm. Which is something the Fed tells you shouldn't happen when you're cutting interest rate or raising interest rates, but it was. So people were beginning to normalize. In my view, normal is always better than abnormal.
Okay, I like it. We got just under a minute. What's our best investment play right now, then? Given all that you think and you know, what do we do? Is it really that hard of a question?
It is, because where you're getting yield, you're not getting a lot of yield anywhere, and so you have to be willing to take a little bit more risk than you would otherwise want to. And maybe if things are just going to resolve themselves in a few months, maybe it's not the worst thing to do to wait.